Aruoture. My guest today is Benedict. I keep wanting to say Benedict Arnold. It's Benedict from Afro Invest. Benedict, good morning.
Good morning. It's a pleasure to be here.
Fantastic. I haven't seen you since October, man. It's been like I haven't seen you since the first LDR ratio at 60%. Was
Yes,
that?
yes.
No, 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 no. It
That
was
no, it's
60% in July.
in July.
October was 65%.
5%.
Yeah, I haven't
Yes.
seen you since the CBN said they should increase it to 65%. So good to see you again.
Nice to
And
be
we're going to be
here.
talking about that in a second.
All right.
Lagos, join the conversation. 0809 444 0981 on WhatsApp. Tweet at us at Smooth91FM. We are streaming on YouTube. Also on Valentine's Instagram page. Hey, at Valentine Ohu. Is it Valentine
That's it.
underscore Ohu?
That's it.
Valentine Ohu on Instagram. Very crisp resolution there on his fancy iPhone. All right, so let's jump into it. What are we talking about? We have a lot to talk about today. So we're talking about the equities market and the big drop yesterday. Talking about, since we're mentioning LDR, the loan deposit ratio, a rumored increase in 2020. What else? A new AMCON chairman. Yesterday we're talking about a new FIRS chairman, and now we're talking about a new AMCON head being replaced by the president. ATM fees being removed by Standard Chartered banks. They're trying to get some market share there. Ajalkuta Steel again with the Russians. What else are we talking about? The Yola Disco, and then bribes. A lot of you are going to have to admit how many bribes you've paid last year or this year, because the NBS, the Bureau of Statistics, has the reports on that. So let's start with the equities market, Benedict. 1.1% drop, a big drop yesterday in stock market. Some of you have noticed that I don't do stock market reports anymore in the morning. I've just left the thing, but it's still there. Stock market is definitely still there. I haven't even looked at my portfolio, but I don't know. Is it the same story?
Well, comparing to what we saw about 5 weeks ago,
Yeah.
we saw like a consecutive 4 weeks gain
Yeah.
period, except for last week where we started seeing those gains start shedding off. So we saw profit taken by investors, and we believe that this is as a result following no economic buffer to kind of sustain those gains we saw across 4 weeks. And then given that we're moving into the festive period, this is also like more of an incentive for investors to actually withdraw their money, because the equities market, following the CBN's restriction on OMO,
Yeah.
so for local investors as well, so local corporates and individual.
Yeah.
So this has kind of restricted where investors can actually place their money in alternative asset classes, and the equities market currently is not really a good place. So we've continued to see profit taking and sell-offs take place, and especially this week, I think on Monday we saw about 45 basis points decline, and then yesterday we just saw about 111 basis point decline. So this just points towards the direction that the equities market is currently not in a good position for investment.
I'm gonna have to. I think we're down by what 16% so far this year.
16.1%.
It is what it is. Okay, we're moving into the LDR thing. Papi K sent in a message, says, Rotus, please help me tell Uncle Mephi. In fact, you guys need to see this T-shirt I made. I'm going to debut it probably on the show, maybe this week or next week. It's a really cool shirt in dedication to our dear CBN governor. But please help me tell Uncle Mephi. And for those that don't know, Uncle Mephi is a nickname that came from somewhere. I think it's double F on Twitter that originated the name, but Mephi is supposed to be a nickname for MFL. But please tell Uncle Mephi, aside from having the busiest December ever in a decade, because boy has he been everywhere. Papi K says he is personally scared for the banking sector with this LDR craze. Now it's been a rise to 70%. It says NPLs, which is non-performing loan certainty, is close to being guaranteed. Now thank you, Papi K, for the message. We should clear this up. We haven't gotten any official word from the central bank about this. I believe this news came from the Guardian, the Vanguard, and then Nairametrics picked it up. So what do you think? Because they did give indications earlier that they'll continue to increase this thing. Yeah.
Okay.
So
following is quite surprising. I mean, it's not really surprising as to what the central bank is trying to do. I mean, following the 60% and then the 65% that is coming up in December, we say that what the central bank is trying to do is just to push more funds into the real sector. And following the 60% LDR ratio that was released, I believe, in July, they noticed that the amount of loans and advances into the real sector increased by over 1.1 trillion.
Yes.
As of between June and October.
Right.
And this was now further supported with the decline in NPL ratio, showing that despite an increase in loan and advances, the risk asset investors were able to pay down what they owe to the banks, and this was showing in the decline in the NPL ratio of 6.5%. So the central bank is seeing this as an advantage to further increase the LDR ratio and make it possible for more more funds to move into that real space, given that right now individuals have no other place to invest their funds in any
Okay.
other alternative class. So the only option they have left is the equities market.
Mhm.
And in order for them to invest in equities market, there has to be an incentive. And
Yes.
the only way to get that incentive is through the funds that will be given to those companies for them to invest further and make their businesses grow. But now, when as the central bank is thinking of this, they're not looking at the bank's perspective and how this is going to affect the bank's balance sheets,
Right.
as well as like in this position with the increase in LDR to 70%, we see the bank's balance sheets weakening
Right.
over time.
And the IMF pointed that out, didn't they? I think
Yes.
the IMF
Yeah, they
was
actually
warning
did.
them about it. Yeah.
And we could also see a lower cost of funds on the bank side, because given that it was recorded that between June and October, the interest that investors, so rather borrowers paid back was 4% lower.
Okay.
This actually reduces the spread between the cost of fund and the interest payment and interest rate that borrowers have to pay. So the banks have to receive as a profit.
Okay.
So as a result, this is going to reduce cost of funds for banks, which is a good thing. But on the customer side, people depositing their money is a bad thing, because they will have, or they'll be receiving lesser money for their savings.
Right.
And this discourages
investing,
savings.
Savings, excuse me. Yes, right.
Exactly. And this is going to lead consumers to want to withdraw their funds and look for an alternative place of placing their money, or rather they will keep it and spend it.
Yeah, okay.
So this reduces the propensity to save and rather increases the propensity to consume.
Interesting. Okay, who's this message from here? Ayo from Surulere. I support the increase in the LDR ratio because it's leading to an increase in loans to the real sector. I don't think we should worry about NPL ratio because that's been trending down and it's forcing banks to improve their risk analysis capabilities. Our contemporary have LDR of over 90%, so it's good. Ayo, are you sure? Okay, well, Ayo supports it. That's cool. What is Frank saying here? Good morning, guys. I don't think the rumored increase of LDR to 70% is feasible. So Frank is taking an opposite position from Ayo. For crying out loud, CRR is 27.5% plus 5% intervention fund. At 70%, banks will bleed for liquidity. Let CBN not kill the economy. So of course, CRR, of course, is the cash reserve ratio,
yes.
which they know, which is a good point. You're making them keep about 27% of their funds with them, and then you're now also saying, okay,
they should give out up to
70% loans. So
what do they have
from
left?
from both sides, you're squeezing them. So a good point to both of our listeners. Yeah, I love it when our listeners disagree and take different sides of different positions. Yinka has a question here. Rotus, what is RTGS, real time gross settlements? Yeah, RTGS is real time gross settlement. I think Yinka is sending this question because there's some I don't know if this is official. In fact, we didn't even talk about this while coming on air, but there's been there's a notification that's been going around. I think it came from Providence Bank, or I'm not sure which bank it came from. It's been circulating on WhatsApp and on Twitter, telling people that the fee for RTGS transfers is going to go up to 800 naira or something. I don't know how real this thing is, Yinka, but I think and somebody tagged me on Twitter as well, thinking that this is the same thing as the transfers that cost 50 naira. But I think for RTGS transfers are for, and again, the real-time gross settlement transfers are for very large amounts that are being moved. So I don't think that affects. Okay, Polaris. Yinka has come back and says Polaris. Thank you. So yeah, I don't think that affects you and I. That's for like super large transfers, and they said that it was from the central bank. But that's not, unless you're a big girl or big boy and you move like tens of millions of naira, then that's when you might have to worry about that. Okay, so from again, thank you for all the messages on the LDR. Again, we do not have official word from the central bank. This is something that came up from the Vanguard. Nairametrics also picked it up. We'll wait to see if they send out a circular to that effect. Okay, let's move on to. There's nothing much to talk about here, but AMCON. I understand that according to a letter that was sent to the Senate, President Buhari has replaced Mr. Muis Banire as the head of the Asset Management Corporation of Nigeria, and that he's named Mr. Edward Adamu as the new chairman. Again, it's still murky. I don't really have it's just
no much information.
On this, but I think they're saying it's according to the AMCON Act or something as far as how long the prior chairman could serve. So we'll just see how that goes. Again, Mr. Fowler's replacement, that one was confirmed as of yesterday, or at least nominated by the president. We'll wait for the Senate to confirm it. So, movers and shakers, people's positions have, being, moved around here and there. Says, who is this Papike Rotus? Do you know the chief of staff? Because refer me. It's a season of change, and yes, my middle name is another name. Papike is making fun of your number. Papike, I'm not going there. I'm not touching any tribal matters this morning. All right, Benedict, let's move on to this news from Standard Charter. That the headline says they're removing charges for ATMs and also with ATM withdrawals and transfers. But we're a little confused as to because right.
I mean, because it's surprising because the charges that they're trying to remove is something that is already known across all banks. They are removing the charges from withdrawal from their own ATM banks. I mean, every other banks you don't get charged for withdrawing money from your ATM, but it's then surprising because they also want to remove charges from fees for transferring fees across other banks and not just within their own set but interbank. And this is quite surprising because if you take a look at 9-month statement for all the banks, you notice that one of their major source of revenue was fees and commission.
Yes.
And this was a huge boost, especially for Zenith Bank. So seeing that Standard Chartered Bank intends to take out this charge and reduce one of their income line, it's actually surprising to see where they intend to make up for that fund. Maybe it's with the increase of loans and advances, and following the CBN's directives to supply higher than 70% LDR ratio, which will also strain their own balance sheet. So this is actually quite surprising. I would like to see where or the direction in which they go with this, but we believe that this is not a good movement
on their part,
their own part. But it's also understandable given that consumers
have complained about ATM fees.
Exactly, especially with the CBN directive of 15 naira in charge on every 1,000
POS transactions.
So
interesting. I would love to see a world where all the banks were free to set whatever ATM charges that they'd like. Of course, we know the 65 naira is imposed from the central bank, but in other climes, one bank can say, okay, you don't have to pay ATM fees for, I don't know, 3 months. Another bank say, we'll only charge you a 30 naira ATM fee. Another one will say 20 naira. So that would just, I would love to see that where there's an increase in competition. There's nothing much here to announce. I heard Burna Boy is their new ambassador or something,
Yeah.
He's having a busy December. I know. I wish we could find out how much our artists are making this December with all the concerts they're doing. But
just to throw a point on that, it's funny because they're cutting one of their major income revenue, but at the same time they're increasing an expense point
by getting a big time celebrity like that. Yeah.
How do you want to
balance it? All right, we move from there to okay. Wait, Yinka says how large is like Yinka? I hear it's in the millions. So that's it's in the millions. These are for really large transactions. That's what I hear. It's responding to the RTGS memo that was sent out by Providus, allegedly sent out by Providus. Okay, Ajaokuta. The federal government says this is another MOU. Good gracious, we've beaten up MOUs on this show. We don't put much faith in them, but hey, it is what it is. That's what the news is saying. The federal government will sign a memorandum of understanding with a Russian firm for the resuscitation of the Ajaokuta steel in January of 2020. Benedict, what else? This thing is just never-ending thing here, man.
Well, we believe that this is actually good in the sense that
it's good,
It's good in the sense that it provides another avenue for Nigeria to make it provides another avenue for a source of revenue to the Nigerian economy.
Right.
And as well, I know it's going to impact on our budget deficit because it's going to actually increase our deficit. But at the same time, if you take a look at the last GDP report that came out, our capital expenditure was actually lower than the proposed budget. And then we complain that the infrastructure in Nigeria is substandard, but when the government is not even spending up to the proposed budget, it's spending below the proposed budget, we don't expect
infrastructure improvements.
Exactly. Right. So if they intend or if they believe that this is one way of increasing infrastructure development in Nigeria and they believe it to work, they should go ahead. However, they should also be mindful of our budget deficits.
Right.
Yes, exactly. So
let me read these quotes from one of our, I think it was our Minister of Mines and Steel, Mr. Olamilekan Adegbite. He said, "We have taken the first step. Talks are on with the original builders, which is a Russian company. The MOU draft is being studied by both sides, and hopefully sometime in January 2020, we will probably sign the MOU. And this is key here. Once the contractors are identified from the Russian side, the funds are already in place. The work will start." Russia is chopping money from Nigeria with these steel plants. It's just anyway. Benga Kamu says, why not just sell off Ajaokuta? Go ahead.
Yeah, I wanted to just add that another issue here is with Nigeria increasing their debts on the international side compared to the domestic side. We should be more focused on the domestic debt rather than international, because it will be much harder to pay for those international given the oil prices.
Where things are.
Exactly.
Tell that to the CBN. They love OMO. That's why they allow foreign investors to continue participating in OMO so they can prop up the external reserves. Benga Kamu says, why not just sell off Ajaokuta? It has become a big elephant, just consuming and not producing anything. Benga, help me ask them. He also says the question for artists, Nigerian artists, is how much they pay on tax. With all these concerts that they do in the festive season. I remember it was either Davido or Wizkid. There was at a concert in Lagos, and there was a big FIRS. No, it was LIRS logo in the back. I thought that was really, really funny. Sheung says, for Ajaokuta, you cannot resuscitate something that never had a life. Well, we'll look. 2020, we will see what happens. Okay, you know what? We only have. Do we do the disco story or the bribes, or do I leave the bribes for tomorrow? Benedict, what do we do first? Do we do this bribe story, or no? Let's do. No, the disco one is a serious thing. Let's do the disco one. Maybe we'll move the bribe story, the MBS thing, to tomorrow. Federal government takes over Yola Disco. Investors to get 26.9 billion. So what's going on here? We're supposed to have a privatization exercise with the discos, and now we have the federal government stepping in. Like, apparently, there's some issues with the Yola Disco in terms of liquidity and so on and so forth. So what's going on?
Okay, so first, the story behind this is what do you call it? So we have, what is his name? I believe it was Transcorp.
Yeah.
Who was actually giving this contract?
Right.
For about 19 billion. But what we then see is the federal government stepping in to offer 26.9 billion and taking over that, and their claim, because it's not just the Yola Disco that is being affected, there are 7 other discos that are being affected. And the claim is that they are trying to reclaim this on the approval that they are breaching the provision of the Electric Power Sector Reform Act and the terms and conditions of their respective distribution license, as well as the remittance order of the year 2019. And this is quite surprising because Abuja came forward to say that they have met all conditions, and it's surprising why they still want to revoke their licenses. Now, we suspect or we believe that this may be a way of the government taking away a source of revenue from the private sector and giving it to the public sector in order to help them fund their budget deficit. This is just a suspect. Just speculation. I'm with you. So it's just a way of them looking for another source of revenue to help them fund their budget deficit. So we don't know if this is the right cause, because at the same time, you're also stopping privatization in Nigeria as well as capitalism. So this is actually a huge cause of concern. And it also questions the ease of doing business moving forward in Nigeria. If everything is moving towards the government, how else are we going to
get these things going? Benedict from AfroInvest, thank you so much. John, Ayodeji, Oluwatayo, Steve, I see your messages. We'll get to them tomorrow. We'll continue. The bribes, everybody admit that there are bribes you've paid this year, because we have numbers from the MBS. That's Business Express for Wednesday. We'll see you guys tomorrow. Thank you all.
Brought to you by Etisalat.